Hello, hello, hello. Good evening, everyone. Firstly, I'd like to thank everyone for taking out their time after dinner to join us on this webinar, where we will be presenting our Malaysia market outlook for 2024, where the theme will be "Rising Tide Lifts All Boats." Wow, that's very, very exciting. All right. We have some time, and we shall start sharp at 8:30. Uh, and tonight, the speaker with us is my fellow colleague, Head of Research, Mr. Joshua Ng, which he has a he's a very, very senior person in research, which he has actually more than 25 years experience with 12 years with RHB. He have won numerous awards. The age, oh my God, you know what? I lost count. The age is just one of that. Yeah. And he is also one of the very few that stick his neck out to call a peak on the glove stocks in August 2020. Yep. Not many people dared to do that back then. And yep, that is our speaker tonight. And before I actually pass the floor to Joshua late in a while, I'm gonna tree a bit of his time slot to do a bit of a promotion. All right. Uh, I mean, a lot of people have actually heard about Kananga. What do we do? We are a traditional broker in the past, but we are actually going digital fast. Well, that's a pun. So let me share you my screen now on what I'm going to show you would be some of what we have advanced forward, uh, what we have been doing and investing to make trading easier for everyone. So firstly, I'm actually in the Kentrade website where you can actually see scam alert, today's event. Wow, this is a promo that I'm going to talk about later. Kentrade 2.0, I'm going to show you what does it does. It's really cool. Stock chat, I'm the host for this, but it's only for clients. And SGX real-time access. For those that have not known me, I'm actually Adrian Ng, your host tonight. And a bit of a my own track record is I was an analyst also for the longest time. I moved out to deal a bit with quant and AI trading. Now I'm actually in the marketing department or sales department where with all the products that I'm actually share with you so that they actually have better understanding of what we do, what do we offer as tools, and how you can actually maximize all this to actually make your trading or investment journey easier. So this is our Cantrade website. You click on open an account here. We are actually full digital. You can actually go check this website out and you can get your account ready in like less than a day. Yeah, fully digital. Amazing. All right. Second would be a promo that we are running for all our clients, uh, extending your contract trading up to T+8. It's called discretionary financing. The promotion period will run across January to June. Eligibility is for everyone. I mean, those that is eligible to open an account. Yeah. And there are more details there, which I will not talk about. That apart, we have also our award-winning Naga warrants for those that are more savvy, that deals in call warrants on both Hang Seng or certain stocks like those days, the peak of glove. You can actually check on Naga warrants out, where we have actually a Naga matrix, which is a live matrix. It's very essential that you always come to this site to check out the warrant pricing versus the underlying, because it gives you a reference of where the call warrant price would be when the underlying would have moved certain price. And this could be one of the hotter topics in these few days. retail security borrowing and lending, which one could actually borrow and short. But I can tell you there's nothing, we have no shares to lend for certain stocks that actually saw a meltdown. So to qualify that. And yes, you can actually lend out your shares through Kenanga, and you can actually borrow it for a short position or to do a hedge. Yeah. And for those that actually do not know us, we also have this Telegram channel called Kenanga Trade to Win. We have already have about 16,000 subscribers. We have numerous signals, very systematic. For those that want to have a peek or an idea on stocks, yeah, a bit cheeky of me, right? So yeah, you can actually follow the link. Just search for Kenanga Trade to Win. This handle here, it'll pop up. So a bit more time. I mean, 1 more minute, Joshua. So sorry. Thank you for bearing with me, taking on the floor. One last one is actually the access to Kentrade that I promised to show you guys is, if you can download the Kentrade 2.0 on your mobile, this is a very savvy feature that you can actually access to see where the Bursa news is, the Bursa announcement, daily news that is gonna pop up here, and most importantly, this function is very important. This function is called research. What is research? It's actually our research reports being accessible in this app alone at your fingertip. Joshua and his team has been working restlessly and in coming up with new ideas for everyone. And most of the time I get the request, do I have a research report for this, for that, for this, for that? Now it's at your fingertips. So you just need to click on it, tune in and click on it. And the best thing is you have a push notification if we have any other offerings, IPO, and even share consolidation notifications. Yep. So, all right. Without further ado, I'd like to pass the floor to Joshua. And thanks, Joshua, for accommodating my selfish request. See, started already. All right. Thanks, Joshua. And thanks, everyone, again for joining us.
Okay, thanks, Adrian. Thanks, everyone, for dialing in, for giving us the opportunity for us to share with you our view for 2024. Today is definitely a very interesting day for us to share with you on our market view. And you know that we have multiple limit down stocks today, and some stock actually had multiple limit down for the last couple of days. I think you have to go back a very long time before you recall such incident in the markets. But having said that, we think there is still a silver lining to it, mainly because it is actually giving you an opportunity to buy stocks. If you miss out during the first and second weeks of 2024, you remember our market actually started the year with a bang, whereas the rest of the world actually was in consolidation mode. Give you an example. Last week, you know, if you wanted to buy Gamuda, you would have to pay 5 ringgit. But today, this week, after the sell-off in all these speculative names, you can actually get fundamentally driven stock at much more reasonable levels. Right now, you can actually get Gamuda, say, at 480, 490. I think the same goes for like IJM. It was at almost at 220. Now you can actually get it for 205. So we take this positively. But having said that, if you follow our market long enough, you know that our market did not do much in 2023. I think if you think back, 2022 didn't do much as well. Our market is actually significantly under-owned by foreign investors, and they are actually coming back in a major way. Why do I say that? If you follow the inflow to our stock markets, in whole of 2023, the outflow was actually 2 billion. But within the first week of this year, we already recouped 500 million. That is 1 quarter. So you can actually see the momentum and how foreigners are actually coming back to our markets. We had a very good first week, second week, a little bit of consolidation. Right now, we are on the third week. There is limit down, as I said, on certain stock, but not to be perturbed by this volatility. Like I said, it's a very good opportunity for you to actually buy at cheaper levels. And if you look at the title of our presentation, we actually do this to institutional investors on a quarterly basis. 3 months ago, when I spoke to institutional investors, we spoke a lot about domestic drivers, i.e., policy reforms by PM Anwar. Unfortunately, if you recall, budget, when it was announced in October last year, PM actually kind of like decided to go slow on policy reforms. So, which means that domestic factors would not be the catalyst for our market. We believe in 2024, the key factor will be policy easing by the central bankers in advanced economies. That alone can actually take our market a lot higher as compared to the level we are seeing right now.
Joshua, would they be because of the potential inflow when the other major countries are easing their interest rate?
Yep, when advanced economies are actually cutting interest rates, which I will actually talk a bit more later on, all these yield seekers, they would have to come back to this region because if you recall, last year, even if you are to put your money with US money markets, you get 5%. So why would I even want to take risks in emerging markets? So right now, the situation is going to change. The advanced economy, they are going to cut rates. So all these yield seekers, they would have to come back to Malaysia, come back to emerging market again. I will actually show you in the charts later. You can actually see very clearly the money is actually coming back to this region, coming back to emerging market. And Malaysia, you'll be surprised, we actually are attracting more than emerging market in general. Okay, I may as well just go to the content of my slides. Okay, just a quick recap on what happened in 2023, which you may be quite familiar as well. Our market was down by 3% at PMKLCI, not great, but certain sectors actually did very well. Utilities, it was because of two stocks, YTL Corp and YTL Power. And of course, the question you ask is, whether they will actually go up further. And then property sector did very well as well, mainly because of Johor play. But we are not a big fan of Johor play. Put it this way, the easy money has been made. So now it's more difficult for share prices to go up further. Why? After the initial re-rating, now investors are asking for earnings. And the earnings is not going to come through over the next 2 years or even 3 years. So I think the share prices would actually be starting to struggle a little bit. Construction, it was a big surprise. Last year wasn't a really good year for the construction sector because a lot of public projects did not get off the ground. But even then, the index, construction index, well, generally reflective of the construction stocks as well, did actually extremely well. And we believe the sector will continue to do very well this year because that is when the government is going to roll out all the public infrastructure projects. What are they? MRT3, Bayang Lepas LRT in Penang. And then there are a lot of sizable flood mitigation projects that are supposed to be carried out 2 years ago during Muhyiddin's time. They have been delayed and they are going to get off the ground, most likely in the first half of the year, and I will explain to you why later on. Healthcare, I'm not quite sure if only stock KPJ is done very well. I think last year it started the year as a penny stock, now it's already 150. And we believe there's still more upside to this stock because they've actually delivered very strong earnings. The other sector I think worth highlighting will be technology. It was a disappointment as well, flat last year. And probably you want to ask, maybe it's good time to go back into technology stock again. Our view is that it's more likely to be a second half story. Why is that? Because first quarter, the sector is still going to be quite quiet, mainly because the sector is actually coming off peak from fourth quarter. Traditionally, fourth quarter is the peak period because of the year-end holiday shopping season.
All right.
And first quarter, you also have Chinese New Year, and China, you have very long Chinese New Year break. So you don't really see earnings coming through in first quarter of this year. So maybe towards first end of first half or beginning of second half, then you'll see, more improved sentiment towards this sector, and then the share prices will actually start to perform. But I think it's time already to position for a recovery in the tech and EMS sector. Right now, we actually quite like Inari. This is the stock we are actually promoting very strongly to our institutional client right now,
All right.
mainly because it is big cap liquid. Because
I like
over
that.
time, then you actually move to the smaller cap company. But for now, things are still, pending. So I think the better way to play this game is to stick with the big cap. And it has actually done quite well. I mean, you remember last year, it was trading at about 280. Now it's already 310, 320, I think up easily 5%, which is not so bad. And then,
For
of
a
course, the
flattish
other,
sector, right? For a flattish sector, I think it did quite well.
yeah,
Yeah.
and of course, last year another big disappointment was actually consumer, mainly because the inflation was still kind of high, and then right now people are a bit concerned over the subsidy rationalization. We don't know when, we don't know how much.
Okay.
So as and when we know how bad is bad, that's when consumer will start to change their lifestyle, and then we will just have to move on. So people are kind of like holding back from spending right now, but as and when they know how bad is bad, then the spending will come back on. So I think consumer is more like a second half story as well.
All right.
So just to Adrian, just to come back to the question you asked just now, money is actually moving from DM back to EM. Why? They need to look elsewhere for higher yields. This is one of the key drivers of how and why our market will do very well in 2024. And then, of course, the second reason or second implication of policy easing by central banks in advanced economies is that when they start to cut rates, you will actually see a more synchronized recovery in advanced economy. And then they are actually a big consumer of commodity as well as manufactured goods. And you know that EM, we are very much dependent on export and dependent on commodity. So as and when they start to cut rates, the demand will actually be coming back, and then our export will actually start to pick up as well as the prices of commodity. So I think.
But on a side note, Joshua, I'm curious. I'm actually very curious because I'm a bit. I do cover SGX a bit. I do track their volume a bit. Our local bourse, the participation in terms of flow versus Singapore is a bit more robust this time around as compared to SGX. So do you think there is a shift of uh do you think the shift of inflow of this money flow from the foreigners could also be driven by a bit of a confidence in our policies that is a bit more open up, like how Tesla, we can now own a Tesla Model 3 or Y, as opposed to 4 years ago or 2 years ago, just like that?
Okay. This is a valid question, and it's quite interesting because it's not easy to compare Malaysia to Singapore because Singapore is actually considered DM. We are pretty much EM still. And there's one interesting thing that happened last year. I was talking to some foreign fund manager. I think you recall Genting Singapore was actually doing very well. And then this guy was actually managing EM funds. Then he was asking me whether it's time for him to actually buy Genting Berhad, for proxy to recovery in tourism. And then he said, then my advice to him is, at that point, Genting was not really moving. So I told him, why not you just buy Genting Singapore? Because that's where the recovery was. And then his answer was, I cannot buy Genting Singapore because it's a DM stock. So I have to buy a EM proxy to the casino business in Singapore. So I buy Genting Berhad. So that's the difference. So this time around, yes, your observation is correct. Maybe our market is definitely a lot more robust than Singapore because people are chasing EM stocks, no longer DM stocks. They are shifting, they're moving the money back to EM. So that is one indication, as a matter of fact.
Okay. Okay.
Right. I will just move on. I think I'll just touch on this briefly. Um, this is very much with regards to the expectation of rate cuts in the US. The Fed is actually hinting at 3 cuts. Market is actually looking at 6 cuts. Canada, we are actually looking at 5 cuts. There are strong reason to expect Feds to turn a lot more dovish, mainly because if you look at the headlines, CPI in US as well as US core CPIs, they have been coming off very consistently. So that actually gives the room for the Fed to cut rates. So I think it's a done deal. Rates are going to come down. That's why EM is going to do well. Of course, the other thing you need to follow very closely is the labor market in the US as well as the consumer strength in the US. If you look at labor market, it's still kind of like very strong. You see, the thing is this: if the labor market is strong, then the Fed may not want to cut rates as soon. But what is interesting is that last month, when the US actually announced November job numbers, the number actually beat expectation, meaning that labor market was actually stronger than expectation. So you would have thought the US market would actually sell off because that would actually reduce the propensity for the Fed to actually cut rates. But on that day itself, the market actually rallied. Why? The market actually interpret this as a sign that the US economy can actually avoid a recession. So they are very happy. Stock market went up. So I think the psychology of the investor at this point of time is that they are very bullish. They want to take good news as good news and take bad news as good news as well. So if you still don't want to buy stock, I think you can actually be missing out on this opportunity. So psychology sentiment is still very, very strong in markets globally. And basically, yeah, they're just basically interpreting everything in a positive way. I guess the other good indication is retail sales. In fact, I just updated this table today. Retail sales for the month of December, again, beat expectation. So not good for rate cuts, but the market actually take it positively, no sell-off. Strong consumer confidence would mean US will actually avert a recession, then it's going to be good for everyone. So that's the argument. Okay.
Okay.
This is more interesting. I think Adrian asked about the flow of funds in out
Yeah.
of emerging markets
Yep.
as well as Malaysia. Okay, we'll start off with EM, i.e. money flowing into emerging market equities. This is what is happening right now. I think to project forward, you can actually use what happened in the previous cycle as a reference. During 2018 cycle, okay, what happened is when the Fed started to raise rate, investors actually pull out money from emerging market in a very major way. Okay, yep. But as and when investors felt that the rates in the US were peaking, they actually started coming back to emerging market again, right? But that cycle, there was an anomaly. If you remember, that was when Trump was the president in of the USA. He started trade war on China, and investors basically got jittery. They basically pull out money from China, pull out money from the whole of emerging market. You saw tremendous outflow here. Even when the Fed started to cut rates, they still refuse to come back because they are very worried of what Trump was actually doing to China. But when Trump actually dialed back on his sanctions on China, that's when money came back again. Right. So we try to actually use this as reference and project what is going to happen to emerging market equity this time around. During the initial part, it's pretty much the same story. When the Fed started to raise rate, money was being pulled out. Okay, midpoint, money already started to come back, very major way. All right, but then October last year, what happened? The war broke out in Israel. That's when investors just want to basically lighten their risk assets, including emerging market equities. You saw a massive sell-off, but December, when the Fed turned dovish, that's when money returning to emerging market equities again. In fact, I'm actually counting because I tracked this number, but on a weekly basis, there had
Yep.
been 6 consecutive weeks since December. We have been seeing inflow coming back to emerging market equities. Very, very strong signal. Okay, let's look at what happened in Malaysia. 2018, nothing much to talk about because 2018, we are basically living in a different planet. You know what happened, right? 2018, you have GE14, you have change in government,
Oh,
after
yeah.
change in government, and
Limit
then,
down.
yeah, you have a lot of policy uncertainties. Investors just stay away from Malaysia, right? So
George
nothing happened.
can, my EG
Yeah,
limit down. Yeah.
yeah, correct, right. That was a nightmare. I think Gamuda was actually 150. You would have bought like,
Two something, I recall. We were
yeah,
the construction analysts back then, right?
yeah, correct. Okay, 2018, nothing much to talk about for Malaysia, but this current cycle 2022, same story here. When the Fed started to raise rate, investor actually pull out money from Malaysia, right? And when at the midpoint, money started to come back to Malaysia. Unfortunately, you know what happened next? GE15, and then there was a hung parliament. Investor just dump Malaysian stock, right? And even PM Anwar managed to form unity government. They still refuse to come back. You know why, right? Because we still have state elections outstanding. So basically, we just we every day we just see outflow. That's basically what happened. But what is actually more interesting is that if you remember, the state election was actually in August, right? In fact, I think on the same day we have a physical market outlook presentation in Bandar Utama as well on the same day, state election. But 1 month before state election, right, foreign money started to come back to Malaysia. Why? At that point in July, signs were already very clear that Anwar could actually retain Penang, Negeri Sembilan, as well as Selangor. So money actually came back 1 month before state election, and then you know the outcome of the state election is well, there was a green wave, but in the end, PM Anwar still hang on to power, so there's no issue. Money started to come back, but unfortunately, like what happened to EM when the war broke out in Israel, investor actually sold down Malaysia quite significantly. But what is interesting, which I mentioned to you just now, is that that's on the chart I showed you, right? Money started to come back to emerging market in the month of December, but Malaysia, November, the money started to flow in already. We were actually 1 month ahead of the massive inflow back to emerging market. Why? Coming back to what I mentioned just now, we are so under-owned, and the political situation, it has definitely stabilized a lot, even though every day you have political noise, you know, who is going to overturn which government. But I think situation is a lot better as compared to let's say 1-2 years ago. So foreign investors are already coming back to Malaysia since November, and they have been very consistent in the month of December and January. As I mentioned just now, first week 500 million, you know, one shot, 1 quarter we recouped the outflow from 2023. So that actually telling you that this market is going to do very well this year. And you know, you just have to position yourself, and you know, the sell off over the last 1 or 2 days is a good opportunity. Tomorrow there will be more limit down, I believe. If the market really being sold down, it's time for you to, you know, bargain hunt some of the blue chips, you know, fundamentally strong counters. Okay, how do we see our market lifting off? That's what I call it in 2024. We liken it to a 3-stage rocket. Okay, stage 1, that is in the first half of the year. You will actually see a lot of public spending. As I mentioned just now, the government needs to pump prime the economy, i.e., they need to roll out more infrastructure project to actually stimulate the multiplier effect throughout the economy. Why? Because your export is still very soft, and then consumer spending is not strong, mainly because all these worries about subsidy rationalization. So they do have the urgency to roll out projects. For that reason, you have to buy construction stocks. Okay, I think banks to a certain extent would benefit as well, because as and when more projects are being rolled out,
There'll be
the
more
contractors will
financing.
have, yeah, correct, they need working capital. So banks will actually
Yep.
benefit. I think the other thing about banks is that we also like banks. Bank is a straightforward proxy to economy. And you know, your GDP, we are looking at about 4-5%. I think this is very much a consensus view. So you want to buy something that gives you proxy to the 4 to 5% economic growth. And also, like I mentioned just now, foreign money is actually coming back to EM, including Malaysia. And you know the banks carry the most weighting in the MSCI EM index. So the
Yep.
first thing they will buy is actually banks. So I mean, you have seen how CIMB has actually performed since December of this year. So I think they will continue to do very well. Any pullback is the opportunity for you to actually buy more for
Yep.
banks. Okay,
Agree.
first half,
Totally agree.
yeah, we expect banks, construction to do well. Towards the second half, stage two, that's when export will actually recover because of the rate cuts in the advanced economy. So you want to position yourself for tech and EMS player. For first half, as I mentioned just now, you buy Inari. Maybe towards the end of first half or early part of second half, you start to position yourself for other tech names, smaller caps. And then, of course, consumer. This is more likely to recover towards the end of the year. As I mentioned just now, as and when we know how bad is bad, subsidy rationalization, we just have to tighten our belt. You know, you have to make some sacrifices. In the end, you still have to spend money, you know, buy things. So consumer will be the last stage 3 of our lift off. And actually, we do like consumer stocks. Again, a bit like banks, it's also a very good proxy to the economic growth. But we are more selective. We want to buy consumer staples, i.e., you know, people like F&N, Mr. DIY, Dutch Lady. We are very cautious on discretionary, i.e., your Aeon, your Padini, because people will be, you know, cutting spending on all these discretionary items. But for auto, I think we still like MBMR because they are the distributor of Perodua, which would not be really affected by subsidy rationalization.
Yep.
But we are very return cautious on B Auto, mainly because they are actually selling Mazda, which is a mid-market vehicle, which would be hurt by subsidy rationalization. Okay, just briefly, what are the sectors we like for 2024? I mentioned construction, I mentioned banks. Healthcare we still like, mainly because the numbers are still looking very strong. The patient throughput is still very strong. Last 1 or 2 years, the sector actually benefited from some sort of pent-up demand from pandemic times, because you know, people kind of like delay their elective surgeries. This is tapering off, but even based on the organic growth in terms of patient throughput, it still can support very strong earnings growth. Our pick is actually KPJ. Seaport Logistic, I was kind of like promoting this stock, Westport, and I checked this morning, it's already hit my target price. The story is for ports operator, even third quarter result, they already show very significant improvement. I think market kind of like knew that as well. So
would they be a
share price,
re-rating?
we will have to see 4 quarter numbers. If the numbers surprise again, then we have to raise our fair value. In fact, both our transport stock already met our target price.
Yeah,
So
Swift briefly touched almost 63 cents the other day.
Correct.
Yeah.
In fact, we just downgraded the stock. Is it today or yesterday? Because it hit our fair value. Utilities,
Right.
you know the name. YTL Power is gone.
Banyak
Wow,
power,
I
bro.
don't even know how to describe.
Power.
Yeah, it's just go up in straight line. It's definitely above our fair value, but we are going to see the company again. We want to find out whether, you know, we have actually left out any of their units or businesses that we have not actually given fair value. I guess the other thing I want to mention about YTL Power is that I got a question from some foreign investors just a couple of days ago. They were asking me about MSCI rebalancing and what are the potential stocks that are going to be added into MSCI this time around. I look at the list of current Malaysian MSCI component stocks. From what I have, YTL Corp and YTL Power are not in as yet. So the next round of rebalancing for MSCI EM, that would have to actually include YTL Power and YTL Corp. So I think today actually came down quite a lot. I think 6%.
Yep.
If share prices come down more, I think probably it's time to take a look.
Probably we shall
Yeah.
check out the chart later at the end of the
Yeah,
session, right?
see where is the best level to
I shall
actually
do
come back
that.
in. Yeah, let me just maybe finish this up. I'm almost done. I'm almost done. Glove is something that we remain very cautious. Mainly because I think investors will have to change their mindset as to how you value glove stocks. I mean, you cannot apply 30 times PE anymore. Last time, before pandemic, you apply 30 times, which is justifiable. They can double their capacity, double their earnings, then your PE will drop from 30 to 15. Unfortunately, after pandemic, it's the other way around. They're actually, they're actually shrinking their capacity. They are shutting down their capacity. So you cannot value them at 30 times. I think a number of the big cap stock are actually even trading at a premium to their book value. So this one to me at best trading, end of the year when COVID cases, when people go and fund the stock, I don't think that is the good way to invest. I mean, if you are taking a trading view, it's fine. But if you are talking about holding this stock for the next 1, 2 years, 3, 5 years, I think this is a sector you have to avoid because the situation is not actually improving. Media is something that we are very cautious as well because they are unable to reinvent themselves. The only thing we have is actually Star because you have the emergence of a new shareholder, Tan Sri Tongkuimon. He knows how to run media business. Right now, he's very much a passive shareholder, but at least he can actually block any deals or corporate exercises that are not positive to a minority shareholder. I think I need to.
He is the Datuk Sri Tongkue On or Tan Sri. He is the father-in-law of Grab, right?
I'm not sure.
I think so, yeah. So probably
anyway,
he might be very savvy in that sense on the digital part.
He's very well respected in the industry lah.
Yeah.
Okay. Anyway, I think I missed something. Tenaga, I should mention. Tenaga share price has done quite well as well. For some of you who are thinking of holding some blue chip to anchor your portfolio, I think Tenaga is something that you want to pay attention to as well. I think it recovered quite a fair bit. I mean, you remember last year it was 8 ringgit 80 cents. Right now it's almost like 10.50, 11. It pulled back a little bit, but it's a stock you want to consider when there is any sell down. Let's say closer to 10 ringgit level. Why is that? Because they are a major beneficiary of investment in data centers in Malaysia. All this data center is going to consume a lot of electricity. That's where Tenaga would actually be benefiting. Yep. So
the
I
optic
would
is
just
there for Tenaga lah. That's the angle, right? For the excess capacity. Yeah.
Yeah. Okay, I'll just take you through very briefly. Auto, we are kind of neutral. We like those selling affordable vehicles, MBMR. We like Hong Leong industry as well. They are selling the Yamaha motorcycles. We avoid mid-market. Aviation, actually, we quite like the sector, but Asia is still under PN17. We don't know how long it is going to take to regularize their operation. MSB, fine. Chinese tourists coming back, but then they are not going to get tariff hike under the current government. So it's a bit tough. Building material, we are cautious mainly because the slowdown in China. You need China to come back in to buy, all these metal in order for prices to actually go up better. But for building material sector, we have an interesting name, i.e. Unicorp. It's a stock that we actually won awards just 2 weeks ago. Best Call Awards 2023. Unicorp is interesting. In a way, it's actually proxy to construction as well. So you may want to see Unicorp in that way. they are doing this cable support system, basically a bit like a casing that you put in your buildings
Is it the
to
orange one that we always saw on bare
yeah,
buildings?
exactly.
Yeah, the orange one,
Yeah,
right? Yeah.
not to hold all your cables. You need a
Yeah.
lot of them for, say, hospital projects, for warehouse projects, for data center projects, for LRT, MRT. You also need a lot because all these, train that use a
Yeah.
lot of cable, and they're actually doing very well. They kind of like have better pricing power right now. What happened during pandemic is that the smaller players, right, they didn't survive. So right now there's less
Okay.
competition in the market. The stock actually went up to 180 for those who actually follow this stock. And then the quarter, they're actually disappointed on earnings. Share price actually came down to about
Okay.
140. And then right now, I think it's about 150. But I think we kind of like, we check around. Things are actually looking good. I think they are not going to disappoint earnings in the next
Okay.
quarter. So be rest assured that it's a good time for you to actually
Take a
accumulate
look at it.
this stock. I think we have a fair value of about 2 ringgit and we are only pricing it at 8 times PE. So
That
it's definitely
is
a stock you want to look at it.
that is a steal. If it's a 10 time, it
Yeah,
will be almost 250, right?
correct.
And
Uh,
just to pick a bit more interest in Yuli Corp, I mean, if I heard correctly from my colleague Nigel, our analyst that covers that, they are the largest player. They own the biggest market share between Malaysia and Singapore for this segment, right?
yeah, they're huge. They're 50% market share. They're huge.
Oh,
Yeah.
okay. That kind
So
of explains pricing
yeah,
power, right?
correct.
All right.
Yep. Okay. Uh, let's move on. Consumer, I mentioned we want the safer name. Actually, for QL also, I think share price actually gone up a lot. We just downgraded the stock recently. So you want to wait for the share price to pull back before you want to go back in. Oil and gas, we are more focused on upstream service provider. USMA is the stock we like. And then Dialog, Yinsen, share prices have not actually performed. So maybe at some point you will actually see some sort of re-rating there. But we still avoid PChem because the demand for petrochemicals are still kind of like weak, mainly because of the slowdown in China and globally. Plantation is a bit tricky. I actually spoke to some foreign investors. It actually scared me a bit, mainly because they just mentioned to me Article 8. You can go and Google Article 8. They tell me they are Article 8 funds and then they don't buy Plantation. They're not interested at all. So that is my concern. So I think for Plantation, the angle would be dividend. And then, of course, right now, there's still expectation El Nino will actually happen sometime this year.
Okay.
We will see
Okay.
how it actually turn out. I think, unfortunately, I mean, if you're holding a lot of Plantation stock, the better strategy is to lighten your holding because foreign investors are just not keen. So that would actually kind of like would not actually support very good valuation.
So
Uh,
this Article 8 thing, Joshua, is it something like a vegan thing that they just avoid
no.
meat
It's
and
more like
poultry?
not environmentally friendly based on their
Okay.
standards. Okay, it may not be totally fair because
Yeah.
they are looking at our pharma industry through their own lens.
Yeah.
And you know,
Not
there's
fair.
some politics behind it because they want to protect their own vegetable oil industry as well. You know,
Soy,
the
corn, yeah.
exactly. But unfortunately, um,
We need the funds, lah.
correct. If you only have local institutional investors holding Plantation stock, you just don't get a super good valuation. I think
Yeah.
eventually, if you ask me, over longer term, maybe some of these Plantation companies will be eventually be taken private. The same goes for a stock like Casino, because based on that same standard ESG, they just don't invest in sin stock anymore. So eventually, I think most of these stocks, including I think Carlsberg, tobacco, that will be taken private. I mean that could be another angle to it. If the valuation becomes like at a steep discount to book value, maybe you want to accumulate. Your strategy is to at some point
Mm.
they'll actually extend the GO. But of course, at the same time, you also get decent dividend. I think some of these sin stock can actually pay you very good 7-8% yield. And then
Wow.
your exit plan will be when all these companies are being taken private. Plastic packaging, you use a lot for manufactured good, so it's not doing so well right now. But we think second half they can actually come back stronger. But we do have a pick here, Tongguan. We like it mainly because share price have actually come back down quite a lot. Despite the not so positive outlook, the share price is at the bargain level already. Property, I mentioned we are not a big fan of Johor play. But we do think the affordable segment is actually selling very well. We are talking about properties priced at 500,000 and below. So our focus will be pretty much MKH. They are actually very stronghold in TOD, transit-oriented
Okay.
development, i.e., you buy a condo on top of the MRT station,
Walking
you
distance also.
correct walking distance around the station. Masing, they're doing very well in terms of affordable housing all over in Klang Valley as well as in Johor.
Mm.
The other
But
name
I
we quite like, yeah, is actually LBS. They are also doing the same thing. They have
okay,
quite a lot
okay.
of viable project in around Klang Valley.
Joshua, if you do not mind, I have two
Mm,
counters that I would like to check with you on. Is like the first one is Skyville, the second one is Sunway Berhad. Probably Skyville's angle will fit probably in the affordable segment that you have mentioned. On Sunway's angle, I was thinking, is it
mm,
more on the potential healthcare uptick that what you potentially might see in KPJ would have a spill over to its Sunway
I see.
Medical?
I see. Okay, start with Skyver. I think value has already emerged. I think it has actually uh, um, come down quite a fair bit since IPO. The products are still selling. They are very strong in fact, in KL itself.
Hmm.
Um, I think the most important thing is when investors, fund managers start to see earnings coming through, they will actually come back. So I think more important thing right now for Skyward is to deliver the earnings
All right, all right.
and to ensure that they can actually hit the sales target they actually set for themselves. But so far so
Okay.
good. I think they have not actually kind of like guided down on their targets.
Nor they
Um,
have disappointed majorly, right?
Yeah, yeah,
Right.
yeah, yeah, yeah.
Okay,
I
that
think
sounds
I
good.
think going forward should be okay. Um, I think for Sunway Berhad is quite a different animal. I think Sunway I'm more inclined to see it as a conglomerate.
Conglomerate.
Yeah, they own Sunway REITs, they own Sunway Construction, and they have this private healthcare business. Um, the entire group is actually doing quite well. Property, they are very sharp in the sense that they do not mind paying premium for land in very strategic location.
Yeah.
The land they flipped, they make money. But yeah, this one to me is more like a fundamental core holding in your portfolio.
Okay,
Of
okay.
course, of
I'll
course, like Adrian
definitely look into
mentioned,
that.
yeah, like Adrian mentioned, the moment they list their hospital asset, that could actually be resulting in some sort of re-rating because private hospital command very steep valuation in the market. Like for instance, KPJ, we are using 28 times, which is the benchmark
Wow.
for private hospital. So if you look at Sunway perhaps as a whole, maybe it's trading at maybe 12, 15 times PE, which means effectively the market is valuing, the private hospital business at also 12 to 15 times. But if they spin off, then they will actually realize the full value for their private hospital. Yeah, there's definitely re-rating catalyst in the
Mm.
event that list their medical private healthcare service division. REITs, I think quite a number of brokers are actually promoting this sector as a defensive play. I don't see how defensive is that. Somehow you will still subject yourself to the occupancy risk.
Yeah.
And then there are just more and more shopping malls coming into the market, taking away your traffic. At
Yep.
the same time, I think the general view is that our OPR will be maintained at the current level. So, your risk fee is actually quite high. So I wouldn't buy REITs unless you give me a significant premium over the risk-free rates. So we're more like neutral. Technology EMS, I mentioned, we are more inclined to turn more gung-ho towards the second half of the year. All right. Okay, I'll just take you through our topics. I'm not quite sure whether you can see from your screen. For banks, we like, yeah, we like CIMB, mainly because it can actually give you additional growth from their regional operation. mBank, this one is a bit tactical. They are up for sale for the longest time, and it wasn't closed in terms of a transaction during those days, during pandemic when share price was at 260, 280. I think the owner wouldn't want to sell. But right now, share price is at 4. So I think there is, it's more attractive for the whoever the vendor to actually let go of the shares. So if there is a transaction, then probably there will be a GO. So this is basically our angle. The other bank we like is ABNB, which is Alliance Bank. They are very strong in SME financing, which is actually experiencing very strong growth. You see our topics, right? 10 stock. Out of 10 stock, 3 are actually construction. We have Gamuda there, we have IJM, and Sunway Construction. So you know how bullish we are on the sector. Right now, these are the big, I call it the big 3 construction companies on Bursa Malaysia. They've done well, actually. But over time, you may also want to start looking at smaller names. There are a few that we quite like. WCT hasn't really done much because the earnings are a little bit volatile. But don't discount WCT. They do have the skill set and competence to actually carry out MRT, LRT, very big project. They have the launcher. So WCT is the small cap name that you want to put on your radar screen, at some point. We also like beneficiaries along the value chain. You see, when you do MRT, LRT, you need tunnel lining segment. Who is actually doing that? Kim Lun. In fact, there are only 2 people doing tunnel lining for MRT, LRT in Malaysia. One is actually a private company, Kim Lun doing 50% of that. So as and when this project get off the ground, Kim Lun would actually do a lot better. And we also like piling contractor, Pintaras Jaya, for instance.
Oh,
why? Okay, because you need piling to do your MRT, LRT project, but it's not so direct. See, what happened is that the piling for MRT, LRT is not so profitable. Why? Because every few days you have to move your machine from one point to another point. So that would actually reduce your utilization. So ideally, piling contractor actually love do piling job for a building because you will be doing on the same spot for the next 6 months. Okay, but the thing is that when MRT, LRT projects come into the market, your piling capacity, would all be fully taken up. So that's when you can actually raise price. Even though Pintaras Jaya, they are more keen to do building piling, but because of the supply constraint, they can actually charge higher prices. So that's how they can actually benefit indirectly. But of course, in the past, they also did some piling for MRT, LRT as well. Sometimes, they want to help out certain peers or certain contractors. They are more than happy to do that.
salvage project, right? Those days.
Yeah, I think I can foresee the next question. What about e-compound? We are a bit cautious, meaning the balance sheet is not as strong as compared to Australia.
You read my mind, Joshua.
Yeah, I know you're gonna ask. I think today was like down 10% from. I think it's kind of like very heavily traded. Okay, consumer we like F&N. And for healthcare, we pick KPJ. We think there's still upside. My analyst actually reviewing the fair value. Right now it's 156. I think we are reviewing it with upside bias, I would say. MBMR, we like as a proxy to the auto sector. In a way, auto is actually consumer as well. Have I left out anything? Inari, as I mentioned just now, will be our picks for tech sector, at least for the first half of the year. Just to highlight to you some of the small cap names we like. PIE basically is a EMS player. They are actually doing Nintendo Switch now.
Oh, the one that
They
you hold on a hand and you can take the controller out, right?
yeah.
The small one.
Okay.
Yeah.
See, the reason why we like PIE partly also because they are non-Dyson. You know, all these suppliers to Dyson, they are actually now suffering because there's definitely a slowdown for all these super expensive hair dryer, super expensive vacuum cleaner in Europe, in US. So the orders are not coming through. But people like PIE, in terms of client base, they are a lot more diversified. So I think is a tech slash EMS name you want to look at it. MKH is our pick for property. They are in the midst of spinning off their plantation unit as well. So there could be a bit of a re-rating in that sense. 888, this is the corporate logo of Dongguan. They also produce 888 coffee for those who know the brand.
Hot, hot, hot.
In fact, it's actually part of the listed company. I was rather surprised. I didn't know it's part of it. In fact, the coffee is actually quite profitable. They can make 1 million a year.
Have you tried it?
Yeah, it's very strong.
Oh, okay.
Traditional coffee. Okay. You look at the share price, it has actually come down to bargain level. And then as far as plastic packaging is concerned, we like them because they invest a lot in R&D. If you want me to pick a packaging player that will still be around in 5-10 years, I will pick them because they invest in R&D. They're actually expanding very aggressively to US and Europe. We do have certain advantage because our cost structure is a lot lower. Our energy cost is lower. So they're taking market share from their competitors in Europe and US. Okay, OCK, basically they are doing telco towers. It is a pain to a certain extent over the last couple of years because they failed to deliver earnings. In fact, I think some fund managers actually gave up on them. But recently, they finally managed to deliver earnings as soon as third quarter last year. So I think the earnings are finally coming through. Share price hasn't done much. I think probably it's almost time for it to re-rate upwards. And I think there will be quite a fair bit of spending and investment when it comes to telco tower with the rollout of the second 5G as well. So this guy will actually benefit. This is Unicop.
218.
I explained to you there was a earnings miss here and then sold down. Now come back to 140, 150 level. It's time for you to accumulate. Our fair value is actually 218. 218 is based on 8 times. So you can actually work out yourself if you're going to apply 10 times. Actually, I have the EPS here. I have the EPS here. So it's 27 cents.
270.
Yeah, 270. So there's a lot of upside there.
It's almost double.
Yeah, correct. That's the beauty of small cap. I mean, when you invest in small cap, you definitely expect multiple bagger. Otherwise, you buy Maybank instead. Usma, we like mainly because a bit same story also. I think they're disappointed in the past, and I think fund managers basically sold off their position and then they are coming back because the earnings are actually coming through.
So their fund participation in terms of insti shareholding has been very low since the sell down.
Not much, I would say. The reason is very simple. You see, the market cap is so small, about 300 million. Yeah, I think this is more like for small cap funds. They want to buy these kind of stocks. In fact, for whole of this one is more like meant for small cap funds instead of big institutional investors.
Okay.
Do we have? Shall we just do Q&A, or you want me to go through?
Would you mind if I actually pull up some charts on probably
sure.
pick a few on the topics? I'll just share with the audience that where we can see.
Why not? Yeah. Okay, right. Go ahead.
So let's take a look at YTBL Power. Let me share my screen. All right, YTL Power. I mean, we have a target price of almost 30 over cent. Now you can actually look at, there's a bit of a weakness today. The candlestick is actually not too encouraging because it's almost like it's a bearish engulfing. The recent high is actually 391. Uh, in any sense, I think that one can actually look at about 349 and actually 328. So we need to watch for YTL power in the context that from the chart perspective, probably we want to wait a bit to see if it breaches 349 and subsequently touches on 328 levels. The moving average level is actually sitting at closer to here, 305. So there, I think for with a bit of a market riot now, I think is good. This could be a few levels that we want to track. But even so, I think that is a little bit higher than our target prices. And that's where probably Joshua has already mentioned earlier that might want to explore to see where if there's anything that there's value that is still undiscovered. So if it's fully valued, then probably a correction is much needed in this context. I think, yeah, the chart has a bit of a, but if you are a short-term swing trader, this stock gives you a good range lah. 3% up and down in terms of its high and low. It has a very good range. Yeah. So that is for the more sophisticated crowd. By the way, I used to be in research as a construction analyst, but since I moved out, I pick up on technical charting. Both myself and Joshua are licensed investment advisors approved by SC. You can check our license in the SC website. Probably the next one I will go on is Ulicorp. Ulicorp is very interesting. Oh, I did my homework before I jump on. Probably I actually delete it so that it's less confusing. Yeah. So the first level that we want to see is today, it actually gave us an indication that you can actually put at this reference at 147. 147 was a closing, 145 is actually a support. And the subsequent support level of where we can actually look for longer term accumulation is actually 140. Partly it is, I think, given what Joshua has shared with me on its fundamentals or with us on the fundamentals in even on the valuation itself, 8 to 10 time PE, right? I think at the range between this level of 140 to 150 is actually a good accumulation stage. But in terms of timing, I think we need some news and kickers to kick in. The next reference level, once the accumulation, you manage to accumulate, if you're on a trading basis, you can actually look to take some half your profit at 154 or 162. So 162 will be a very major range that it will need to break before it actually retests its recent high of what Joshua has actually shared with us, which is at 187. Yeah, it looks even at 16 at this level to 187 is actually quite lucrative in that sense. So I think I will definitely keep this in my watch list on a daily basis to see if there's more opportunities on weakness. It's an amazing one. Probably you can also check out on the Tiguan. Tiguan is an outlier in the chart. Outlier in the chart there. On a quick one, 187 is a support. The recent high is actually 203. With the recent weakness of the market, I think if we look at a weekly chart to look for the low, right, we are almost there. We are almost there. 182 is actually the lowest in the recent round. So I think in that context, I mean, we can kind of agree that there is a good level of risk reward. I call that as a RR. I mean, hopefully it's a Rolls Royce lah, but if we make good money enough by controlling our risk reward, it will translate into, I will start with a Rolls Royce from Shell petrol station first. Yeah. Small little goals. So Tongwan is one of them. And Joshua, any stocks that you might want me to point out in terms of the technical charting? Or probably we can also take some questions from the floor for Q&A. muted. Yeah.
I think there's KGBTA.
KGPTA. Okay, that's a good one. In fact,
Yeah.
this is Samuel's favorite, right?
Yep, it's one of our smaller cap so-called
Picks.
tech-related picks.
Yeah, and it had did fairly well, despite a lot of people. It took a while, but it actually did really well. So I think at current levels, right, KGB did a peak at about 237. And if you see, I have actually drawn a line earlier, partly because I'm studying it also. There are interests. I mean, there are interests from my branches, my fellow retailers and our clients. So I actually look into it, but due to the current market weakness, and now it's actually crossing the moving average line with its stochastics is actually trending down, right? I think for a bit of a re-entry, if you have taken profit, more I'm speaking more on a trading perspective rather than investing here. You can actually refer to 208 or 2 ringgit levels. That will be a starter of an entry point. Yeah. Then the next one will be history. If it starts rebounding from this 2 level, then we will be hoping to see a challenge to the new high of 237. I believe Samuel's target price is a lot higher, closer to 280, if I recall properly. Right. Yeah.
Give me a second. We do have a price. We are looking at 3 ringgit and 28 cents.
Yeah. About.
Yeah.
So Hume Cement. I got this question today from our clients, and Randhill, Berjaya Corp, SFE. Okay, let me start with Hume Cement, Randhill, and SFB quickly. Sorry. So you see, you see the chart is already drawn. I actually mentioned that I will look at the range at 263 in terms of a bit conservation, partly because the sign of the stochastic is weakening or is actually retracing. For Hume Cement, it's not an easy read because despite the sound down, it actually went the other way, trying to challenge its new high. So what the only caveat with Hume Cement, Hume Cement Industries is actually that the liquidity and the participation is a little bit thinner, compared to, I mean, the cement stocks in terms of liquidity is a little bit thinner. So in terms of your bid ask, the gap can be a bit high. So you want to be a bit careful in that sense, partly because the range is a bit tight. Yeah. But in the event, if you are patient enough to anticipate for a bit of retracement, I think 241 levels would be a level to wait for. But if you were more on an aggressive mode to trade on it, I would refer to 277 as a breakout, and I'll follow. So it's a two very different strategies where one, you require hawk eye and monitoring the market. One, you can actually set and see, you can check occasionally. You don't need to be as hard pressed. So yeah, that's Hume Cement. So tomorrow will be rather critical. If it breaks on 277, the word is chase. But that does not guarantee a win, partly because I always advocate and advise people to see, you must set a stop loss. How do you do it? Probably you can use 263 as a stop loss if you were taking on a trading position. Yeah. So it all depends on how you want it. Rand Hill, should we sell? I think I saw some news saying analyst report. Okay, in terms of, you see, these are the stocks I review quite occasionally for clients and even our stakeholders. We have a Monday stock chat. I actually give out stock recommendations. Yes, it's stock recommendations because we are licensed. Yeah, those out there, I don't know. Yeah, so this is a very critical point that you want to look at. 105. 105, if it breaks, is really ugly. I think in my stock chart review, someone posed this question and I mentioned to them at that point of time, if it breaks 1 ringgit and 12 cent, run. That's what I mentioned to them. So that's I think the candle was around here back then, but of course it did a rebound. But this is not the best setup, partly because if those that have actually studied chart, right, it looks like a twin peak. Twin peak is like a double top. So this would be a neckline. If it falls, there would be a so-called potential retracement closer to, first it will need to touch 98 cent and subsequently 925 and 825. Yeah. So if you have made some money out of this stock or any stock, if you're on a trading position with a good objective, always learn to take your profits. This is where I think we from Kenanga would always encourage everyone to actually learn to take a profit. Uh, Partly you will save yourself from this misery of limit down. Yeah. SFP Tech Outlook, the chart has been not great. It's on a downtrend. It's about 98 cent. Oh, sorry, it dipped even faster. It's 88, 87.5. All right, good point. You can see all these charts I've been studying for a bit. So 865 is a point to actually look at. If you are more conservative, you can refer to this. Oh, sorry, let me delete this. 845 to be at a so-called safer zone. So where do we want to look? How do we want to look at things? Is probably on a SFP tag, I would look at a mean reversion band. You can see that it straddles between 1 and actually on the lower limit at 845, 84.5 cent. So in that context, right, I will ask myself this first question: where is my further risk? Is it worth taking a position where my risk is limited to 845 with the opportunity of closing up to 1? I think that is a good risk reward. But in the event that it breaks here and it comes down to this level, it's still on the lower end, but I would not suggest anyone to be holding it. If you look at the chart, it's still there. So I think it's quite safe. So if you have a longer term to 3 weeks to 3 months kind of horizon, right? You can actually do a strategy like this where you can accumulate a portion of the 30% allocation here, and you can allocate another 70 or 30 or 30 here, or you can actually set it lower here. So that will take you a longer term view. Yeah. As we come to Nestle, did they come under boycott, Joshua?
Okay, Nestle somehow is affected by the
The recent,
boycotts.
yeah.
Yeah, correct. But in the first place, the valuation of the stock is never cheap.
Never
But of
cheap,
course,
right?
one of the reason why fund managers buy this stock is because it's actually component stock. So for consumer stock like Nestle, i.e. consumer staple, we actually like F&N more, mainly because F&N on one hand is a very
Local brand.
defensive, very defensive kind of sector. On the other hand, they also give you a bit of growth because they are actually investing in a dairy farm in Negeri Sembilan. So you basically get the best of both worlds. You have defensive earning as at the same time you also have uh, uh, growth driver over the longer term. I mean, for other consumer stocks or consumer staples, I think most of the time they are everyday business as usual. So that's why you don't really see share price appreciation. So you still need to grow your earnings in order for share prices to move higher.
Yeah. But do they sometimes face the cost pressure of the rising material costs also? That's why it's not easy
Yes,
to
yes.
grow.
Okay,
Yeah.
I think that the other point I need to mention about consumer staples is that we actually did not recommend consumer staples, I think, last year, mainly because of the the situation in Ukraine. The stock commodity prices were sky high, and you see their end users are very sensitive to price increases. If they raise prices, this consumer will actually switch to cheaper alternatives. For that reason, they have to kind of like absorb the higher input costs. But right now, the soft commodity prices have actually been coming off. So consumer staple in general, you actually will be seeing expansion in margins over the next 6-12 months. So that's why, despite the subsidy rationalization, we still want to hold some consumer stock in our portfolio because
Okay.
they do benefit. They're going to surprise in terms of earnings.
Okay. We have quite a number of participation with questions even after Nestle. Berjaya Corp, I can actually share about that. Ben is commenting there could be better picks on TA. I mean, this is a session for us to have a bit of a conversation together. Probably you can actually throw up some names so I can review it for you too, Ben. Thanks for the recommendation also. Berjaya Corp, Gunting and Gunting Berhad, which is better? Probably maybe I jump into the technical part of things for Berjaya Corp. But Joshua, have you heard any management changes in terms of business direction for Berjaya Corp as of late?
Unfortunately, I think Berjaya Group's counters are not widely followed by
The instis, right?
institutional investors, apart from maybe B Food.
VJ Food.
Yeah, I think even
But
7-Eleven
that was
is
also
not very.
affected by the recent
Yeah, correct.
active
Yeah.
activities. Okay, just to follow up on Berjaya Corp's chart, right? There's a bit of a weakness already, a correction, but nonetheless, it's actually on a range bound. So, in other words, if you deem that there is a very safe zone, but you don't mind being stuck with it for a while because you see it can really go sideways for the longest time. Uh, yeah, I'm not too excited about that. So, yeah, that's Berjaya Corp for you. Genting Berhad versus Genting Malaysia. Joshua, in terms of both companies, what's your view in terms of fundamental angle in this? Before I move into the technical
Okay.
part.
For those who follow Genting Malaysia, you know that last week, or was it last week? Last week they announced a RPT, related party transaction. They are investing 100 million US in one loss-making units. That's why you saw the sell down from about 3 all the way down to 260. Um, I think Genting perhaps fell as well, but not as significant. So I mean, if you are talking about technical buy, trading opportunity, uh, to me, maybe Genting Malaysia would actually look more interesting because it has actually come down a lot more. Put it this way, lah. I mean, for people who invested in Genting Berhad or Genting Malaysia, right? The related party transaction is going to happen. It's a matter of when and how
Yep.
how bad, So
Yep.
to me, in a way, the sell-off also a little bit overdone. I mean, not as if, that never happened before. So I think from a tactical view, I would actually recommend Genting Malaysia more than Genting Berhad at this point in time.
Okay,
But of
so
course,
let's.
for longer term, for risk management, I think
Berhad would be better,
Genting
right?
Berhad would be a lot more stable because the business is actually more diversified.
Yeah, and also
Yeah,
because it holds Singapore also, right?
yeah, yeah.
Yeah. All
But
right.
for
So
technical, that will be Genting Malaysia, I think.
yeah, so
Short-term play.
let me jump into the chart. Oh my God, sorry, guys, this is one of the charts that I actually recommended on my stock chat. You saw this little arrow here. It's 7 November. I mean, only for clients lah. You need to be client, right? So I hope that you guys are all clients. If not, do head to Kentrade and I give you the walkthrough. But what happened in the past does not justify any the going for the past performance does not justify the future's projection. So the question is why we are discussing the chart and also the outlook for Genting and Genting Malaysia, where Joshua have actually shared his view that I totally concur with. But on this chart basis, right, is I just want to guide you guys through. 265 is 264 is where the support is 1.2.3 dot. If this breaches with a very bearish closing, the next wave if gonna go is actually at 259 and 253. When I did the recommendation it was 245, it rallied all the way up to 289 on a weekly Monday basis. So if you do not have the link, do check with your remisers and dealers. So if you ask me where would it go here, I think now I would take a view that if I'm on a trading position, I would take a chance here at the 246 level, and I will set a very tight stop loss. If it touches 259, I will exit and wait, because I'm hoping now that I'm anticipating a move back up. But for the current situation, I'm still looking at it in that context. I'm just giving you an idea on how one can actually set up if you're on a trading position. Yeah, for investing, needless to say, if you see all these lowest level, just collect. Yeah, that is more on investing. Yeah, and for the dividends, when the dividend spikes up to closer to 6 to 7% yield, that's your call. That could be a so-called strategy or signal to follow. So let's jump to Genting. So Genting, if you see, it shares very similar move in that context. So to answer your question in that context, right, that is not much of difference in terms of setup, but there is a difference in pricing. So if you only have 20K or 10K budget, probably you want to buy Genting Malaysia. Own a bit more, the share price movement could be potentially a bit more. So in that angle, yeah. The next question, Alice, I cannot comment on Kenanga stock. Me and Joshua cannot comment on that, so very sorry. But well, you can do your own study on the market volume. So yeah. Johnson, thanks for joining really early and checking if we are gonna proceed with tonight's webinar or not. On your question on JSB, I think it is a limit down stock, and I think Afin Huang, or which broker that received an image that it only require cash upfront. I'm not sure if it's in there. Please do not touch it for now if you have great interest in it. In any case, I'm trying to say that let the storm settle down. I mean, Joshua, do we agree in that context? On terms of letting things settle, yeah.
I think one of the things that I talked about when I meet retail investors, especially I think prior to the pandemic, is that our market has totally changed in terms of structure. This market is no longer like 80s or 90s dominated by retail players. The market is very much dominated by institutional investors these days. And for your stock to move up, your stock would have to be owned by institutional investors because they do have the firepower there. And of course, maybe some of these blue chip stock are a little bit more boring. You don't get like 10% up in a day, but that is how you can make money. Instead of just buying up all the penny stocks with no earnings. I mean, it's bound to happen. The stock can go up, can double like over the last 6 months. I mean, 2 limit down session, you basically give back everything already. So it's just not the way we should invest today. The whole market, whole structure has changed. I can give you another good example. When we are doing our marketing to even to institutional investors, they're asking for smallish construction names to invest in. Well, I mentioned a few just now. There are some other names that are more speculative and loss-making. I basically tell them, the whole landscape has changed. Last time, obscure, smallish construction company can get multi-billion contract from the government. Overnight, go limit up, the market cap can actually expand. But under the current political landscape, right, this just cannot happen anymore. So in that sense, we have to change our expectation, change our mentality when it comes to investing. So we need to stick with companies with earnings, because earnings,
Yep.
dividend, these are the cash flow, these are the things that can actually support your valuation. It's not
Yep.
boring.
Yep.
If
Yep.
boring, fine, you can make money with 1-2 stock, right? I don't know, you may lose money with another five stocks. So it's just
You need to be
there's no fun.
sophisticated, lah.
Yeah, correct,
Yeah.
exactly. Yeah. Well, it's okay to look at chart, but in the end, we have to
Yep.
still look at the numbers, make sure
Yep.
that the companies are genuine in what they're doing. They
Yep.
have profits, they have cash flow. They are
Yep.
not actually owned by some of these, I don't know, all these names in the market, right?
Chef lah.
But of
Chef
course,
lah.
if you decide to invest in those kind of stocks, you are actually taking your own risk. You know your risk and return. So I
Yep.
think that's a strategy that can actually keep you going in this new markets. It's no longer like before.
Okay, we have quite interesting questions on a few stock. I saw Mindtech, Redtone, Frontcan, and by the way, I recommended Frontcan in last week or this week. It actually went up 10% also. That's on our weekly session for clients, our stock chat. To answer also Sui Lee's question on the regular technical recommendation, you can actually you can actually register for a trading account and you get a login to the Kentrade 2.0 where you can actually check out the research tab. We have our technical recommendation there from our research team. But if you want a bit more face value like myself here, I actually conduct a stock chat session at 8:30 a.m. on every first day of the week. Yeah, except that if I'm on block leave, so then we'll miss one session in that context. And I will always review on the picks that I do. Most of the time it did well, some of the time it did not, and that is trading. If you cannot take the risk, I would advise that do not be in the market. Yeah. So I mean, enjoy your money, buy the things that you love. But without further ado, let me jump into chart Mindtech. Mindtech, someone asked me a review for them. The level will be it shouldn't break 145, 14.5 cent. Stochastic reading is looking to do a turn. So anything above 145, we need to stick there before it do a so-called upward swing. This is actually a nice chart. But like what Joshua has earlier highlighted to everyone, if you were to deal with this kind of stock, you must take the risk that it may never deliver in earnings, and your objective is pure trading, and you must be ready for the risk reward that is going to follow. I mean, if you cannot take it, please do not start. Yeah. So I mean, I have no problem actually reviewing charts for you guys, but I just want to constantly remind you guys that you need to actually look at your objective. Yeah. We have another 5 minutes. Probably Globetronics, I will just address it. That is actually kind of related to the limit down stocks in a way. You can check the H news there. There's a news script that I read. APB is looking to acquire Gtronics, even though it is well owned by Instis. So it has quite a bit of negative news flow on that. But let's see, it is a net cash company lah. But I think if you look at this level, oh my god, you see, I do a lot of homework, and you see, these are the recommendations that did not work out. Also, you see, in the past that when I did that recommendation, so this is where we want people to be learning to take their risk. But at this level, is actually falling to closer to 136 level support and 144. You're looking about 5% kind of risk level and a rebound of closer to back to 161. That could be a potential, or if you touches further down, you need to sell. So that's my take on Globetronics. So Frontcan, nice setup. I mean, look, that's the pick. 8 January, I mean, 8 January, second week. Those who follow the stock chat will have seen that, you have potentially made this, but these calls are all more for trading purposes rather than fundamental investing. But I mean, these stocks are backed by fundamentals, so it's kind of safe. So Frontcan needs to rest around this area. So let me put another line here, 337 as a tail. If you want it to be higher, you can, but let's take the tail for a start. It hovers above here, then there's a potential of continuation of upward swing. And the next level is going to challenge actually 350 and actually sorry, let me delete that. Here 360. So yep, that's I mean, we are from an investment bank that we have our utmost best interest for you guys, and despite good time, bad times, we are always here and we are licensed in that context. So if anything that you need, do sign up an account to check it out. I mean, there are certain things are privy to clients, so I can't comment if you are not. So in that context, yep. So red tone is a bit trying to challenge the top of 850. Currently is on an overbought zone, so there's a bit of a weakness. So in that context, you see today it tried to close and repeat. So there's an opportunity to break that level. If you really want to be on a trading on a momentum, which you have time, this is the zone that you want to look at. And if you are actually savvy enough, you can also even look at an hour chart to see where the formation is. Yeah, but I think you need to be savvy to handle that lah. So in terms of intraday, it's a good rate, but in terms of longer term, this is weakening. So it should straddle here a bit. If not, then I would like to see it to hold above 78.5 for a bit of an extended period before it continue. Yeah. So yup. Okay, the next I did not follow. PBA and also MNRB. Insurance company. Joshua, what do you think about MNRB? It's more fundamental question.
I'm not quite sure we have coverage. It's one of the more boring stock, unfortunately.
Right. Yeah. Okay. Probably if I hear anything, I can check with this money man lah. $4 signs, right? So yeah, money man. You can actually ping us to say hi and introduce yourself, you know. I love to know a money man. PBA. While we are at this, what do you think about the water tariff concession kind of hike story, Joshua?
Okay. Yep, we were asked the same question by some institutional clients as well.
Yeah.
And interestingly enough, we were actually looking at valuation for Intex this morning. We actually have a buy for this stock, but it's already surpassed our fair value. Right now it's trading at 92 cents. Our fair value is probably about 72 cents. Earnings are still not quite there as yet, so we are actually using price to book.
Okay.
Currently, we are using 0.4 times, but then we try to track back when was the last upcycle for the water sector, and
it was during Puncak days, right? That one.
Yeah, no, that one there was a recent one. After doing a bit of research and look back some of the old news, there was actually an upcycle for water stocks back in 2014, and then the driver for that upcycle was actually Langatu. I'm not quite sure you guys still remember that project.
Yeah, I do.
Okay, that one is a very big multi-billion water treatment plant project. Because they're doing this, right, you need a lot of pipes, a lot of trunk mains to actually construct the whole infrastructure. And the reason why the project actually took place in 2014 was, if you still remember, there was another project called Pahang Selangor Raw Water Transfer Project.
Yeah.
Funded by Japanese. Basically, Selangor, we don't have enough water, so we actually had to channel water from Pahang, and that was a concept at some point, but it became a reality. The project was actually completed. I think IGM was involved as well. So 2009 and 2014, over 5 years, they actually built that water transfer project. And 2014, they completed. That's when we built Langatu. And because of Langatu, there is a catalyst for the sector. So coming back to valuation for Intex, for instance, at that point, the valuation went up as high as 0.7, 0.8 times price to book.
Okay.
So which means right now, let me see, 0.7, sorry, 0.4 is 70 cents. So 0.8, you're talking about 140. So there could be still upside to all these pipe makers. I guess the other pipe maker that you probably have heard before is actually YLI. These are pipe makers. Of course, water concessionaires, you have people like PBA, Renhill, of which share prices have already gone up. So I think, yeah, you should actually put Intex as well as YLI on your radar screen. Assuming that this whole thing is going to get off the ground, probably share price can actually potentially move higher.
So looking at what Joshua has shared, if you're looking at a 0.07 standpoint of a peak of how Langatu of a big project could be, now I think on a price to book level, if I quickly look at announcement for PBA, there's about another 10% to 15% upside in terms of this is first quarter, third quarter. Probably they are doing another. Yeah, probably there could be some room, but let us jump back on the chart. And then this is where you will realize that I can't answer all your questions, and I'm not the prophecy that tell you how you should live your life, right? I mean, feng shui masters will only ngak lay sap nin pat nin la, but you actually never hold them to their words, right? So I'm going to share with you on how you can look at PBA. PBA actually formed a new high today, oh my God, my English, his historical high, 262. While we cannot predict on how high can it go, if you're so itchy and you wanted to trade this stock, you should actually look at where you should cap your risk. 230 is where you should run if it swings down. As it is, it looks like the interest is still robust. There could be another breach on its so-called resistance. Fantastic. But always you want to be prepared when you're dealing with the uncertainty. You must be certain of where you must run for the exit. So to give you a reference, 230 is where you can actually refer to. And yeah, and we are actually overshooting in time. And sorry that, yeah. So I think we should wrap up already. And yeah, sorry, Thomas. Probably you can join us on a stock chat. And yeah, I think we overshoot by too long. Yeah. So Joshua, I'll leave the floor to you. Then we can say goodbye.
Okay, thanks all the participants for your time and for your question. We hope to see you very soon again. I'm not quite sure we are doing any face-to-face kind of presentation. I'm more than happy to see you in person. All right. So everyone, happy 2024 again. And for those celebrating Chinese New Year, happy Chinese New Year.
恭喜發財啊, guys. 恭喜發財. Okay. Bye. Thank you again. Thank you, Joshua. Bye, guys.
Thanks. Bye.